Hi there, welcome to Neppy Invest and welcome to July the 18th, 2024. I've been busy today, haven't had a chance to look at the market since it opened, and I've noticed it's been a pretty bad day, particularly for tech companies, which to be honest with you is not a surprise because NASDAQ was down almost 3% overnight. Dow Jones Industrial was up. So it was mainly the tech companies. So I do know Nvidia was down 7%, and a few other tech companies were down about 10%. Not sure what drove that. Haven't investigated. I have been busy, but I don't remember anything significant being released. It just could be a little bit of negative sentiment in the sector. That is, perhaps that's all it was. Uh, on the Australian markets, we are much less tech, we are more financials and mining, so we aren't down as big as the Nasdaq. And I thought there was a possibility we might be up for the day because the Dow Jones Industrial was up. However, every single index is down. So the agenda of today's video fairly simple, and I am in a little bit of a rush, so we'll see how we go through today's video. But I do want to do exactly what I do in all other videos. I go through the ASX today, including the best and worst performing sectors, indices, and companies. Have a look at the top 5 stocks of the day. And I had quite a few to choose from here. And I've come up with a pretty nice list, including a few of my, not favorites, but a few companies that have a special place in my heart, including the company that comes in or has come in at number one. Share price of this company is up 30%. However, I'm not a shareholder of this said company. And those companies that did not make it into the top 5, I will look at these companies when I get into the chart section of the video. And I also have a company that did not get into the top 5 stocks of the day, but I do want to discuss this company or a fund manager or LIC a little bit more. And then if I have time, a big if I have time, I want to look at some of your comments because I noticed there has been quite a few comments in the last 24 hours. In fact, a few of my videos are now getting over 1,000 views. Anyway, so if I have time, that's the most important part of that statement. If I have time, okay, and I'm not going to have time if I keep dawdling on. So the market has about 45 minutes left of trading today. So let's have a look at the best performing indices, and of course, tech's down quite a bit today, which probably means WiseTech is down about 3 or 4%, something like that. Utilities, healthcare, staples, all have had an okay day, relatively speaking. I would say some of those are defensive, energy, industrials, discretionary, all down by only or less than 0.2%. But IT, the sector, down 3.1%. Telecommunications down 1% as well. And if we look at the indices, the only index here that is up is actually gold. But that's not all the indices. There's a few more here. So let's have a look. And we have utilities, gold, healthcare, and consumer staples. So I want to have a look at the ASX 20 really quickly. So let's do that, down at 0.17%. So I don't expect an absolute bloodbath for the top 20 companies. And we already know that because it's only down 0.17%, except maybe for WiseTech. Let's see how WiseTech has performed today. Down 5.82%. REA Group, which, yeah, it's a tech company, down 3.93%. So you can just see the bloodbath or the tech bloodbath that we saw overnight on the American markets has translated to our markets as well, based off how WiseTech has performed. And the best performing companies in the ASX 20, Goodman Group, real estate, Woodside, energy, CSL, health, Woolworths, staples, not discretionary. It's not like we can choose not to eat. Well, maybe some people can do that. And Aristocrat, which, where does Aristocrat fall? Oh, that's interesting. Consumer cyclical. Is it really cyclical though? Is gambling really cyclical? Maybe in the bad times we gamble more. Actually have no idea. I don't gamble, by the way. Zero gambling at all. In fact, I said that to someone at work once, and they said, "Well, you invest in the stock market. That's gambling." I went, "You just proven that financial education is needed in this country. If you believe investing is gambling, yeah, we need financial education." Okay, anyway, So let's have a look at the best and worst performing companies on the ASX. And this is where it gets interesting because I have no idea. In fact, I don't even know. In fact, I can look at it now. If any interesting announcements have been released since 10 a.m. The last announcement I looked at was Mirrabooka, which is what a company I want to talk about. Didn't make it into my top 5, but I want to talk about it. So ASIC representatives for Numi, Ares Resources did an investor presentation. I know there's a few announcements in regards to the Newsum Mining Investor Conference. So that must be happening today, maybe tomorrow. And Stavely Minerals released a cash flow report. So nothing, Light Wonder term loan repricing. I don't care about that. Okay, so let's have a look at the worst and the best performing companies. Maybe I should rephrase that. The best and worst performing companies. Always go with the best first. Maybe you should go with the worst. Anyway, so we have Miramar Resources. Moshio has performed well today. Remember the last 2 days, Moshio had pulled back a fair bit. Now let's have a look at the chart for Moshio. Moshio, was it MXO? MXO. So we probably would have seen a little pullback the last 2 days and today, and look at the volume coming through the last 4 days. So this company triggered on my watch list or my scanner on the 15th of July, and it went up 29% that day, then down a lot the next 2 days, and up a lot today, and pretty good volume. And Miramar, let's have a look to see if Miramar released anything. By the turnover, I would say yes. They did release something today. High-grade copper, lead and silver from Gascoyne project. So this is definitely worthy, not wary, worthy. What is it to go again? Worthy of being put onto one of my watch lists, and that watch list is my high spec volume. So yeah, massive volume coming through today. Bit of selling, however, and we can see why. You should be able to see why there's been selling today, because the share price has been in downtrend, and those shareholders who bought at high prices are overwhelming the demand for shares. So there's been more enthusiasm from the sellers, and that's, I hope, understandably why. But this still deserves a spot in my high volume spec. And I'd say maybe in a week or 2 weeks, I'll probably delete this from this particular watch list, because I probably would bet, if I was a betting man, share price would not go much higher than it is now over the next few weeks. I could be wrong. That's why I watch it, just to see how it happens. So I'm looking for patterns here. But pattern recognition of what I've achieved so far, recognizing patterns, I think this has more chance to go down from here than up. So that's Miramar Resources. Otherwise, Dust Group. Here it is, Dust Group, up 28.8%. Not surprised. They did release a trading update, and this is the company that has a little place, good place in my heart. I'm not a shareholder, but I'll tell you why when we look at this company, which is the top stock of the day. Dust Group up 28.8%. Markup is only 47 million. Otherwise, nothing else here. Oh, I'm very happy that Keely Resources is up 17.4% because I am trading that right now. AVA Risk Group is up. That's interesting. I'm no longer a shareholder of that company, although it's fairly low turnover. So let's have a look by market cap. So Zip up. Zip was one of the companies I'm going to feature in my charts. They did a couple raising, and the share price has rallied. So obviously the market is more confident about Zip. Accent Group up 10.71%. This company did make it into my top 5 again, coming in number 3. So we'll have a look at that company. Select Harvest didn't. Hutchison Telecommunications didn't. But turnover there is $511. Tourism Holdings, no. Another company I'm trading, Acton Engine, is up 10.35%. So I'm happy with that. And otherwise, nothing else here. So let's have a look at the worst performing companies. And I'd say there's going to be quite a few tech companies here. I'm just assuming at the moment. So nothing down big. So obviously no bad announcements have been released. DGR, that's interesting. They released an announcement the other day in regards to something about a London company, funding by a London company. So they're down a little bit. So this could be the buy the dip situation for DGR. I'm just going to write that down. Otherwise, no significant bloodbath here. Gold Hydrogen was a bit of a, I said that pretty badly, didn't I? I said like a bogan. Gold Hydrogen is down a fair bit. That had been a market darling recently, and I think maybe sentiment in this company is starting to shift more negative. Yeah, you can see a beautiful chart, but share price is starting to turn a little bit more negative right now. And particularly if the share price falls below that last low we saw in late June, that would be a bad sign for gold, hydrogen. Otherwise, nothing else here. So let's have Aurora Labs down below 10 cents. Always interested when that happens. When a company is in a bit of a run and then the share price tries to get above 10 cents and fails or pulls back, tries to get above and pulls back, tries to get above. A lot of times you will see eventually it will get above 10 cents and stay above 10 cents for a while. Maybe not a long time, but at least for a while. And you can see that with Aurora Labs. Yeah, it's really struggling to get above 11 cents. It's going up and down, up and down. It finally got above 10 cents on the 12th of July, and it's been going up and down since then. I think this is very healthy for Aurora Labs. Not that I'm training it or anything. And let's have a look by market cap. And we're going to see some big companies here. WiseTech, won't talk about WiseTech again. However, Domino's Pizza I will talk about. They released a trading update last night at about 5 p.m., so I completely missed that. But it's worth enough for Domino's Pizza to come in at number 2 on my top 5 stocks of the day. Otherwise, Neuren Pharmaceuticals, just a bit of noise there. I'm pretty sure I had a pretty good day yesterday, if I remember correctly. Chrysler Corporation, yeah, it's fairly volatile. What else do we have here? Yeah, a few tech companies here, I suppose. Appen, 4DS Memory, but we haven't really seen a major bloodbath. What I'm just going to do is I'm going to go back to the indices. I'm just going to have a see what other companies are in IT, if they have companies here by market cap. So what are the biggest companies? WiseTech, Xero, NextDC. Our team is under a takeover bid. Technology One, Life360, Macquarie Technology, Codan, Megaport, Digadata, Iris, down. SiteMiner, which is up, interesting. Audinate. I do actually trade and own quite a few of these companies. Gentrack is actually up today. Okay, that's interesting. I do own and trade a few of those companies. Okay, so let's have a look. Actually, no, before we get into the top 5 stocks today, I just want to have a look at this company called Mirrabooka Investments. This company, or this fund manager, whatever you want to call it, released their preliminary final results today. And I actually really like these announcements, and I'll show you why, particularly if you're searching for ideas. The only problem is you have to know what to look for here, or what companies or fund managers. So they release NTAs and top 20 investments, which in itself is really interesting. So they released that on the 2nd of July, but I'm not going to open that up. I'm going to open up their preliminary final results. And you get a lot of information in this particular announcement. So this is a small cap. They call themselves a small and medium-sized fund manager, or LIC. I'm not even sure which one is which, but here. The reason I like this is you get an idea about what sort of companies these people like. And you can also get ideas about some of the companies that are favored among fund managers. So let's have a look at some of the companies they like. Now they go through the financial numbers and then they start talking about companies. So this is on page number 3. They're starting to talk about companies. This outperformance was driven by the strong performance across a number of holdings in portfolio, with the strongest contributors being Gentrack. So Gentrack is one of our biggest holdings right now, and I'm still not willing to sell anything. I want to sell, but I'm getting no reason to sell. And the share price just keeps going. This is one of the best charts on the ASX right now. It's a beautiful chart. And so they own Gentrack. They also have long-term holdings in Macquarie Technology Group, Temple & Webster, Netwealth, ARB, and Hub24. And all those companies have done wonderfully well. But there's more. In fact, they have a list of companies they have traded during the past year. Let's go down. So these are the major transactions in the investment portfolio. So they've acquired IGO, IDP Education, Region Group, Lindsay Australia, and Telix Pharmaceuticals. Now, to be honest with you, when I looked at those 5 companies, probably the only one I'm interested in right now is Telix Pharmaceuticals, or that's probably the outlier among these 5. I would say they are more of looking at some value here, particularly when it comes to IGO and IDP Education, maybe even Lindsay Australia. Those companies' share price has dropped or have dropped a fair bit. I don't know about Region Group. I have a feeling that's a REIT. Am I right saying that's a REIT? It's a REIT? Let's have a look. See, yeah, they're talking about property valuations. Yeah, so I'm not that interested in this sort of companies. And for instance, let's go through the charts of these 5 companies, and you'll be able to see why they might have taken position in these companies. Because, well, maybe not Region share price going sideways. I don't know why anyone, but IDP Group. What is it? IEL share price downtrend. IGO share price downtrend. What was the other one? Lindsay Australia. Share price not quite as much of a downtrend as the other two, but yeah, it's still trending down. Compare that to Telix. Telix is more of a, I wouldn't say a FOMO, but yeah, Telix keeps hitting their performance out the park. In fact, funny enough, share price of this company is down today, and it didn't make it top 5 because they issued an upgrade. Typically, when a company issues an upgrade, the share price rallies, not drops. And I think this could be just because of what happened on the Nasdaq overnight. So let's go back to Miraduca, where it's called. So there's some of the companies they've acquired. What have they disposed of? Reese, Networth Group, JB Hi-Fi, Car Group, and REA Group. And just looking at those 5 companies, valuation is a big reason why they sold out of those companies. So I did a video on JB Hi-Fi, and yeah, I agree. That company is overvalued based off history. Networth Group, I'd say that company's highly valued. Maybe overvalued, but definitely it's getting to the high end of the usual valuation. Probably saying could be said for Car Group and REA Group. So you can just sort of see what this company is looking for. They're looking for value in the small and medium-sized companies. New companies added to investment portfolios. So these include other companies other than those other 5. So we're talking about Janison Education Group, SiteMinder, Imdex, Dexus Convenience Retail, Life360, Aroa Biosurgery, Cannondale Property Trusts, Genetic Signatures, and Sigma Healthcare. Few of these companies I actually do like. I actually like Genetic Signatures. Don't mind Aroa Biosurgery. Like Life360. Imdex, okay. SiteMinder, interesting. And I even don't mind Dexus Convenience Retail. Now, what are the biggest holdings? This is the other interesting thing about these sort of companies or these sort of announcements. You get the 20 biggest holdings. So their biggest holding by far is Macquarie Technology Group. Not sure about that. Then ARB Corporation, Gentrack, Mainfreight, which I believe is New Zealand, Car Group, IDP Education, EQT Holdings, which is a company that's been popping up on my radar. So EQT has been popping up. And why? I think this is pretty obvious why this company has been popping up. It's in actually a really nice uptrend right now. And go and on and on. And there's a few companies I do like here. IPD Group, ResMed, Breville Group, Pinnacle Investment Management Group, PEXA Group, REA Group, Hub24, Fish and Parkle. So there is a bit of a correlation between what companies I like and companies this particular fund manager likes. But there's also quite a few companies I don't like they've invested in. So this is the main reason why I don't invest in companies like this or funds like this, because there's not a complete overlap. Now, in saying all that, this company does perform, this fund manager does perform and outperforms the market on a yearly basis, going all the way back 10 years ago. Just in the last year, they've significantly outperformed the market. Anyway, that's what I'm going to talk about when it comes to Mirrabooka. Except let's have a look at the chart. And I'd say the chart looks pretty good for this company over time. So over time, you probably have to look at the weekly chart. And yeah, over time, yeah, over a long period of time, it looks pretty good. But not for me, but this is a way you can get ideas. Okay, so let's get to the top 5 stocks of the day. Starting at number 5, we have Telix Pharmaceuticals. Share price down. Bit of a shock, down 2%. The share price did open up on the day. In fact, it would have opened up about 3%. Yeah, about 3 or 4%. So it opened at 20, or actually, the high of the day was $20.76. It closed yesterday at $20, round number. So the company actually did release a pretty good announcement. guidance upgrades in the title of the announcement. Quarter four 2024 revenue business highlights, guidance upgrade. And typically, when a company releases guidance upgrade, it can lead to the share price breaking out, or it just confirms the uptrend. Now, this is not an uptrend ending announcement or share price action. Nowhere near it. I just think the market's a little bit nervous because some people within the market, some participants within the market, might be trying to argue this company is significantly overvalued. But if you look at the growth of this company over the past few years, I think the potential of this company over the next 5 or so years, uh, it is less less easy to call this company overvalued, particularly when they release an upgrade like this. Now, this was a revenue upgrade. That's probably the other thing. It's not a profit upgrade, it's a revenue upgrade. And they've increased their guidance from 445 to 465 million US dollars to 490 to 510 US dollars, which is a significant increase. It's about a $70 million increase Australian dollars just in revenue. And I'd say their margins aren't going to change all that much. So this will be more than likely a profit upgrade from the company. Now, one of the reasons why the share price might have decreased is because the market expected this sort of announcement from the company or this sort of upgrade. And that's definitely true. So let's just have a look at the daily chart. If you have a look at the weekly chart, yeah, what can you say about that? But if you look at the daily chart looks pretty good as well. And even though the share price is down a little bit today, no reason to panic just yet. Just yet. Well, yeah, not even soon. Anyway, I was trying. Maybe someone would say I'm implying that maybe soon it's time to panic, but even soon it's not time to panic. So that's coming in number 5. We have Telix Pharmaceuticals. Coming in number 4, a company they've been popping up a lot lately. A company called Titomic. What's the share price up today? Oh, it's down 8.6%. It was up. It probably would have been up about 10 or 20% on open. Went to a high of 20.5 cents. And I think it's just sentiment within the tech space drive the share price of this company down today. They released an announcement. Repcon Titomic Joint Ventures kicks off with 2.3 million order. So I don't know heaps a lot about this company. The technology sounds really intriguing, and I think the market thinks this company is really intriguing. Let's go have a look at their about section because I cannot tell you what the company does without looking like a fool. So this company is, I like how they always say, Titomic Limited is an Australian public company. Sometimes they say is a AS listed company, and it's like, yeah, no, duh. Anyway, this company specializes in large integrated solutions for industrial scale metal additive manufacturing using patented cold spray additive manufacturing, cold spray AM technology. Titomic provides cold spray AM solutions, OEM production, and R&D services to the global aerospace, defense, shipbuilding, oil and gas, mining, and automotive industries. I am really looking forward to this company's pennies for seed for the June quarter. There is potential, just potential. This company could be very close to becoming operating cash flow and free cash flow positive. And if they achieve that, all bets are off. Now, in saying all that, this company is richly valued right now. Markup 200 million, 161.7 million. So there is a lot of promise already baked into the share price and valuation, and the market loves this company right now. So a lot of momentum behind Titomic right now, particularly if you look at the daily chart here, share price has just exploded in 2024. So in fact, if you go back to November last year, the share price of this company was 1.5 cents. You could buy this company at 1.5 cents. Now it's 16 cents. This could have been a 10 bagger for you if you bought this company in November of last year. Share price has really taken off. Not really concerned about this one-day candlestick. I think, again, it's just a bit of noise, bit of profit taking, a little bit of concern about what's happening in the tech sector in the United States. If you have a look at the 1 hourly chart, I don't think the uptrend is broken just yet. Definitely not. Definitely not. I think it's just a nice little pullback, a very healthy pullback for Titomic. I think I did show the Appendix 4C, the most recent Appendix 4C the company released. So let's go back to April, 30th of April. And I think I opened this up yesterday's ASX Daily Rundown video, and I was a little bit surprised that this company had $2.2 million of receipts and was close to becoming operating cash flow positive. However, that was thanks to government grants and tax incentives. Probably also imagine this company could increase their receipts, but they do spend or might spend a fair bit of money on costs. Product manufacturing operating costs 1.7 million. Definitely a company to put on your radar, I think. So that's Titomic coming in number 4. And I think the main reason it's coming in number 4 is just because of the positive sentiment behind the company over the past month, or really since the start of 2024. Coming in number 3, we have Accent Group, which owns shops, which owns that shoe shop. I'm trying to remember what it is. They released a trading update. It didn't sound that bad. I actually did have a read of this, and I think it sounded positive. The reason I said it sounds positive is the CEO, Daniel Agostinelli. Trading conditions across the group in the second half improved from the first half, with like-for-like sales in the second half 4.1% ahead of prior year. For the full year, total like-for-like sales are up 1.7%. So there is a bit of positiveness coming into the second half of the financial year. So they talk about Athlete's Foot. That's what I wanted to say they own. So they own, I suppose they own mostly, or if not all, foot companies or footwear. So Skechers, Athlete's Foot, Hype DC, Style Runner, Nude, Lucy, and Hoka. Apparently they're getting out of something called the Glue Store, which I've never heard of before. Anyway, so a positive trading up for Accent Group. And the share price has rebounded, or responded. That's what I was looking for. Responded and is up 9%, 10.2%. Now, this is the daily chart. So let's have a look at the daily chart. Share price has been going sideways for the last year. Yeah, for almost the last year, share price going sideways. Is this a breakout? Share price at a 3-month high. Last time share price was this high was back in February. So we're talking about 5 months ago. So this is a possible breakout for Accent Group. The volume today, the highest volume the company has seen since August 2021, almost 3 years ago. There you go. So a potential breakout for Accent Group. I do know quite a few fund managers like this company as well. What's the valuation of Accent Group? P/E ratio 15.5. Now, potential breakout for Accent Group coming in at number 3. Could have came in at higher. However, Domino's Pizza released another negative trading update. The only reason I say it's negative is because the share price is down 8.6%. So business update and financial year 24 outlook. So the market hasn't liked something in this. They released it at 5:12 p.m. last night. I did not notice this announcement until would have been just before the market opened. I just went back to see if any announcements were released after about 4 p.m. yesterday, and this was one of 2. There was another one from Shiro something, SHM, Shiro Holdings. Share price has done nothing. And Domino's Pizza released another one. And they were talking, I did actually read this, and they were talking about, the only thing I remember, they were talking about Japan, and they're being critical on themselves, or maybe their present self is being critical on their past selves, particularly when it comes to Japan and their growth plans for Japan. And you can just see that by the first maybe few paragraphs. So Domino's Japan opened 403 stores between financial year 20 and financial year 23. 67% expansion pre and post COVID. The company advised in April this resulted in a larger weighting of immature stores in unpenetrated markets. Following this period, working media was challenged through a combination of higher media costs and lower advertising funds from the deceleration of sales amid changing post-COVID consumer behavior. Sort of blaming the consumer there. So they're going to close a few stores. I just think their rollout plans in Japan were just too ambitious. And I think that's what they're implying here as well. And they also talk about France, if I remember. Yeah, they talk about France somewhere down here as well. Outlook. So Outlook, talking about after the store closures that outlined above and the typical level of store closures year to year, store growth is expected to be flat to slightly positive. One of the selling points about Domino's a few years ago was their rollout plans. This company was going to become bigger and bigger because of the rollout of stores. So that is definitely disappointed the market. Medium term 3 to 5 year outlook. Uh, uh, so both financial year 25 and financial year 24 store openings are below the 3 to 5 year outlook at between +7, +9% new stores. And there's also the possibility that it could come down, particularly if they continue to have problems. And they mentioned long term, which I'm not sure if I probably would read much into long terms just yet for this company. So anyway, so no real massive financial news here. It's just negative because of the closing down stores in Japan. It doesn't seem like things are moving in the right direction just yet. Hence, the share price is down. But let's just have a look at the chart. Is there any reason to hold shares in this company just yet? So far, the answer is no. Although I do own a small portion of shares in my high quality portfolio. So the question becomes, is this company high quality? I think there's definitely questions about that. Share price is in a downtrend. What can you say? It looked promising back in December, January of this year, or December last year, January this year. It looked promising, starting to get promising in January of last year. Definitely not looking promising right now. In fact, the share price at $33, if we go have a look at the weekly chart, the last time the share price was $33 was way back in 2015. So almost 10 years ago. And if you look at the chart back then, beautiful uptrend. That's when you wanted to own this company, was back between 2010 and 2017. Share price has dropped from $170 to $33. So share price has dropped, was it 70, 80% in 3 years? That's a pretty big drop in share price. So it's coming in number 2. We have Domino's Pizza. Not a time to think about buying this company just yet. The hits keep coming for Domino's Pizza. All right. Coming in number 1, we have a company that has a special place in my heart. I'm not a shareholder. And in fact, I was a shareholder of this company once. I only held it for maybe 6 months. And I'll talk about why this company has a special place in my heart. The company is Dust Group. And they released a trading update today. And the market's gone, wow, things are not going as bad as we thought. Financial year 24 trading update. Share price up 30.5%. Is this the breakout of the year? Well, maybe I'm getting a little bit too dramatic there. So let's have a look at the trading update first. And I thought this was positive. Maybe not 30.5% higher positive, but I think this was positive. And you can just see that in the wording they use and the comments they make. So I did see a tweet. Someone said this was or did not beat expectations. So sometimes it doesn't matter if the company's results beat expectations. It could be the outlook. And I think it's all about the outlook here. So everything's down significantly from last year. So total sales down 8.2%. Underlying EBIT down from 16.5 million to 6.2 to 6.4 million. So they even haven't got a percentage change because it's down by more than 50%. Net cash is up from 16 million to 20.8 million. Inventory is flat. But here's where it becomes interesting. So during the second half, and this follows the same theme as Accent Group. So in the second half of financial year 24, the group sales run rate continued to improve on a monthly basis with positive sales growth of 0.4% on previous corresponding period. Now, is that month or is that the second half? I'd like to see some monthly numbers here because they do mention on a monthly basis. Anyway, so this has been achieved for the last 5 weeks of the financial year. In the second half of financial year 24, total sales were 5.8% lower on previous corresponding period, compared to a decline of 9.7% in the first half. So things are not as bad as the first half. Improved sales performance in the second half reflects the implementation and talk about why. Talk about Mother's Day week. Yeah, so this actually sounded positive. In fact, their CEO and Managing Director, Vlad Jakubson, financial 24 has been a time of transformation at Tusk. And then he goes on and on. So I thought this was positive. Didn't really think 30.5% higher positive, but it's positive. And I think the reason why the share price is up a lot is not because it's a 30.5% positive sort of announcement. It's just a lot of bad news or more or greater bad news has been already priced in the share price. So this is better than expected news from the company. That's why the share price is up. Now, will I buy buying Dust Group right now? No. Based on this chart, I'm not quite there yet. So share price or the chart looks horrendous, and this does not change it just yet. But it's a step in the right direction for this company. So why, should talk about this, why does this company have a special place in my heart? If we go, this company listed in late 2020. Here we go. This is where they listed. Listed in December, no, 2nd November. The company released a profit upgrade, exactly what I want to see, on the 29th of December 2020. Share price on this day rose 12.8%. I typically don't buy companies that have just IPO'd for at least 6 months unless the company releases a profit upgrade. This is one of the examples where I bought into a company after they released a profit upgrade just after listing on the ASX. Another company I did this was for IPD Group, and I've not sold my shares in this company. But this was a trade, buying on a profit upgrade, and I was never going to own shares in this company for the long term. And you can see why. Share price went on a beautiful tear after that. And the reason why is when a company releases a profit upgrade, you can see positive effects of that profit upgrade for 6 to 9 months after the announcement. So 6 to 9 months. I actually have done research on this. And yes, 6 to 9 months, you get a positive reaction. And so I bought on the 29th of December, which means typically based off 6 to 9 months, I'm going to sell between June and September. So between June and September is when the share price stopped climbing. This was a perfect example of that 6 to 9 months is the time limit where you're going to get the benefits of a profit upgrade. Now, a way to get around that is if a company keeps releasing profit upgrades or positive announcements. I think by that stage, Dust Group had stopped releasing any positive announcements, and that was the end of the uptrend. The end of the uptrend. In fact, it was in July. So 7 months after that positive trading update in December was the peak in this company's share price. And after that, share price moved into a downtrend and has not moved out of the downtrend. In fact, that's interesting. It's been a downtrend until today. Today is the end of the downtrend for Dust Group. That's interesting in itself. So this could be a breakout, the end of the downtrend, which has been going on. So I set this downtrend way back in October 2021. In fact, let's have a look at the weekly chart. You should be able to see this probably a little bit better, maybe. And I'll get rid of the moving averages. Yep, it was a perfect downtrend. Every single time the share price hit this downtrend line, it pulled back. In fact, you can see here, it just mirrored the downtrend line for about 3 or 4 months. And now it's broken out. You can just see that breaking out of the downtrend perfectly in this week's candlestick. So interesting times ahead for Dust Group. Company coming in at number 1, top stock of the day for July 18th. Now, let's get on to looking at some charts. Companies that did not quite make it into the top 5 announcements of the day. I've got 5 to talk about right now. Not sure if you heard that little burp I made. I'm not sure why it started when I was talking. First, we want to talk about Evolution Mining. They released their quarterly results today, and the share price is up 2.9%. So, is that in line with gold? Let's have a look. In fact, what I could do is actually go to gold, my gold watch lists. And a few gold companies are down pretty big. Some gold companies are up pretty big. So it's all over the place for gold companies today. But Evolution Mining is one of the best performing gold companies on the ASX, just based off this. Very quick look. Not that excited when I look at the chart. That is a weekly chart, however. Let's look at the daily chart. Share price is at a very important level, or very close to an important level, which is around about there. So it's at a resistance level. Anyway, so not that quite enamored with this chart just yet, because the share price is in a general long-term uptrend, but it is at an important resistance level right now. So it's trying to move an uptrend. There was a beautiful uptrend, by the way, here from 2015 through to 2020. Share price of this company rose from $1 to $6.50. So you can take advantage of these beautiful uptrends in mining companies, as you can see from Evolution Mining. So that's Evolution Mining. They did release their quarterly report. I did not have a look at it. A company called NW Holdings. That's right. This company released a pretty good trading update today. I thought it was positive. So up 1.92%. So, results update. I think this was quite positive. In fact, I believe they beat expectations, if I remember correctly. So, EBITDA, they beat EBITDA expectations, approximately 195 million, highest over EBITDA result you've seen in the guidance range of 175 to 185 million. So this was results that beat expectations. However, the share price hasn't really rallied. Now, in saying that, if you do look at this chart, the chart actually doesn't look that bad. Particularly, this is the weekly chart. If you look at the daily chart, I think the daily chart looks okay too. I have no problems with this chart at all. NRW. Chart looks pretty good. Prophecy. This is an interesting one. I do own shares in this company. They released, and I noticed the share price was down. They released a business growth update. It didn't sound that bad, but immediately on open, the share price fell to 85 cents. I'm wondering if this was a trigger of stop losses. There was just a bit of a panic on open. It wasn't that bad. I don't think it was that bad. And it's good to see the share price has lifted during trading today. That's a good sign that I think maybe this was just panic, but share price still down 8.8%. And you can just see, when you look at the chart here, the one-day candlestick actually is a fairly bullish one-day candlestick. So fair bit of buying when the share price got below 90 cents. When I say fair bit, not a lot, but enough. Another company I was looking at yesterday, there was a lot of buying when the share price fell, was SKS Technologies. And we've seen it again today. Share price dropped to $1.47 and then rose. So I just want to see if there was a similar pattern than yesterday. It seems like there was. And I'd say people were selling this on open just like yesterday. And they've been fooled again. 2 days in a row, sellers have been fooled, and there's been enough buying. There's been a lot of demand for shares in this company, and they have completely beaten the bears and the sellers. 2 days in a row, no reason to sell your shares in SKS Technologies just based off what's happened today and what happened yesterday. Buying has come in during the day, and the share price is flat after being down all day. Okay, but I didn't want to talk about SKS. I do want to talk about this company, QXV, share price up 2%. They released a business update. Sounded okay, but I just noticed by buyers and sellers, there's first buyer is at 7.2 cents. The first seller is 8.8 cents. So I'd say this company is illiquidly traded. And you can see that. Share price up 40.8% on the 16th, down 14% on the 17th, on 787 shares traded. So let's have a quick look at the chart for just fun and games. Oh, you just say that. Actually, it's a really interesting chart. Share price downtrend. Downtrend. Look at that downtrend. Whoa, I have not had a look at this company. And this is probably the reason why. It did break out March and April. It went from 5 cents to 10 cents. It doubled, then pulled all the way back to almost 6 cents. And then it just went over a bit of a tear the other day, up to 10 cents. But again, 10 cents, resistance level. And finally, Zip. Zip's had a good day today. So up 9.35%. Possibly indicated price because it's after 4 p.m. Price might close a little bit higher than $1.75. They've done a capital raising successfully. Yeah, so I think the market's just saying, well, we have a little bit more confidence in this business moving forward, less risk, and the market loves less risk. They hate risk, and this could be just that. And to be honest with you, if you look at the daily chart for Zip, it's still looking pretty good. Still looking pretty good. It's bounced off this purple rectangle, which is a support zone for Zip. It's bounced off it absolutely perfectly. So pretty good day for Zip and Zip shareholders. Okay, that's all I got for today's video. Yeah, no time for any of your comments, sorry. Anyway, if you have any questions, any thoughts, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.